So, Gil, thank you for joining me to recognize 65 years of REITs.
Thank you, Sarah, for inviting me.
So, when we spoke to you on the 50th anniversary of the REIT industry in 2010, you noted that the comparatively low leverage of REITs was a positive force for commercial real estate. Would you still say the same today?
Yes, and before I answer that question, I'd just like to congratulate Nareit on its 65th anniversary. It seems like just yesterday that it was the 50th anniversary of the industry. So yes, low leverage is a tried and true aspect of all public REITs, and that has a lot to do with investor appetite for highly leveraged public REITs. During the great financial crisis, the leverage that was enjoyed, the low leverage that was enjoyed by many REITs, including Simon Properties at the time, and allowed them, although expensive, to be able to raise capital, including debt capital, well before anyone else in the private real estate sector was able to do so. So the answer is it was wonderful to have low leverage REITs back then during the great financial crisis, and certainly is today because it helps with the risk return profile of the industry and the sector.
And you also commented previously on the REIT sector's ability to raise capital in challenging circumstances. Is that strength just as important as ever?
It is. I think so. I think the markets are frothy right now, and who knows what the corner, what's around the corner from a broader market standpoint, because REITs are public and they have relatively low cost of debt capital and equity capital, depending upon their pricing and how well the public sector is attracted to them. They can raise capital in many cycles at much lower prices than private real estate entrepreneurs can. So I think that it's part of the holy grail of real estate. The REIT vehicle provides liquidity and low cost of capital after it finds its way into the public markets past the IPO process.
And another observation at the 50th anniversary was the likelihood of a new wave of entrants into the REIT space. And that's definitely something that we have seen. Looking forward, do you think there's more change ahead?
Oh, I absolutely think so. I applaud the REIT vehicle. I applaud Nareit for its focus from a policy standpoint to make sure that the REIT regulations are focused on the different types of real estate assets. So, although technology focused real estate companies are fundamentally real estate companies, obviously the life sciences industry with lab space, certainly digital properties. It was a good example of a REIT with networks. In addition to that, we have cell tower REITs today. These are all very important parts of allowing retail investors to be attracted to those kinds of asset classes within the REIT sector. And I think that with AI and our focus on chip manufacturing in the United States, I think there's a lot that holds positively for the future use of alternative REITs in terms of the types of real estate that they own, not just traditionally apartments, retail, et cetera.
Okay, what would you say is the main legacy of REITs at 65? And you've mentioned things to look forward to. Anything else that we might see from the industry?
Well, I think the legacy, going back to 1960, by the way, right? So the legacy is really first and foremost where we started, although again, Nareit and Congress has done wonderful work trying to improve the vehicle. At the end of the day, REITs allow access to real estate for retail investors through mutual funds or other alternative directly investing in REITs for retail investors that only institutional investors have historically been able to have access to. And I think that will, and we just discussed that with respect to the alternative asset classes that are available. And I think that's just a good example of why the REIT vehicle is so important, because I think the legacy is attracting high quality real estate for retail investors and also keeping the leverage on that real estate low. Also, I think the legacy is there for raising capital. There's always a place for private investment funds and real estate investment funds, but the cost of real estate, the cost of entry into those real estate funds can be high with the various promote structures. And even with the public wrapper, if you will, of a public REIT and the cost associated with being a public company, I think the overall cost of investing in real estate through public REITs is much more attractive from my perspective than it is in the private sector. And I think that's part of the legacy as well.
Excellent. Gil, thank you so much for sharing this occasion with us.
Thank you, Sarah.